All right, good morning, everyone. It is 8:38 on the morning of December 19th, 2022, and this is my pre-market strategy session. So the title of the video is The Bottom of the Gap is in Play, and this is on the Qs. So here we have a chart of the QQQ, and you'll notice here these two yellow dashed lines right here, and this is the gap between November 9th, the close on, or I should say actually the open on November 9th, and the open on November 10th. A big gap up on that morning. And I forgot, I think it was the Fed said something, I can't remember what caused the gap exactly. But from a technical point of view, gaps are sort of, I don't want to call them mistakes, but they are they require repair work. And basically, what eventually happens with all gaps is that price action comes back to backfill the gap. And sometimes it takes months and years for the chart to repair itself, and sometimes it's only a matter of days. Now, this gap has been here for almost a month now. Yeah, actually over a month. So a month ago, this gap was put in, and so now there's been 4 weeks since that gap was put in. And in markets that are very, very volatile, in a bear market, I tend to expect gaps to be repaired sooner rather than later. And so here we are. If the Qs opened up right now, they would open up 0.09% lower than its previous open. I'm sorry, than its previous close. And inside of this gap, this 276.01 right now is resistance, but it's not very strong resistance. It can be pretty weak. It's not until we get about halfway below the gap, halfway into the gap, that the upper side of resistance, the upper level is much stronger resistance. So today, we could see a rally that puts us right back above the gap again. And this sort of close into the gap could just be drawing a whole bunch of bears in just to get liquidated, just to get a rally. That's the sort of cynical side of things. That's the how does that one trader put it? Frost, I think is his last name. Trick, trap, fool, and frustrate crew is what he calls it. And so a close. This is Friday's close right here. Make it a little bit bigger. Let me get the volume out of the way too, so that it's a little bit easier to see. There. So this close inside of the gap is probably bringing a lot of bears in, which is understandable. It's inside the gap. The real next target, logical target down here is 267.76, which is the open from November 9th. So the bottom of the gap is in play. A close inside of the gap, puts the bottom of the gap in play. And we are in a bear market. The trend is your friend until the end. And so, here we have, downward moves in a bear market. That's the direction to trade in, This blue line right here is the 19th. Now that represents what should be the beginning of a Christmas rally, which looks less likely right now. Of course, just looking at the chart, it looks bearish. There's in the past four trading days, we've gone from 296.65 to as low as 272.61 for a negative 8% move in 4 days. It's tough to get bullish on that. Just because it's Christmas. I'm going to move this blue line out of the way. So that's our marker for the Christmas rally. But I was expecting the gap to get filled well before this blue line. Now, this blue line represents today. So there will be, after today, there will be a candle where that blue vertical line was. And without it having tested the bottom of the gap by now, it's out of time. The time for the gap to have been tested was back in this area somewhere, well before today, that's for sure. So it's kind of out of time. So it's looking pretty bearish to me, and so that's the side that I will be trading on today. And if I'm wrong, then I know I can get out quickly. The 1 minute is showing oversold pre-market. The 10 minute is showing kind of middle of the road. The VIX, is pretty much the opposite. Although the VIX is coming out of overbought on the 1 minute and headed toward overbought on the 10 minute. So we could see if the VIX decides to turn around here, if it on a 1 minute and 10 minute basis decides to go into overbought and starts coming out of overbought, then we could see a little bit of a rally here at the open. Anything's possible. So if I were to guess, I'd guess that the open, like as of right now, I'd guess that the open would look something like this. Let's see, here's 930. A run up, hit the top of the gap, and then come down. It's only a couple points, from 274, almost 274 even, up to 276, almost 276 even. That's a likely scenario for the day. In fact, actually, it's what played out on Friday here. Popped up above the gap and then came back down and closed inside of the gap. Tried to test it here at the end of the day too, but couldn't quite make it there. So as of right now, it's possible to see a strong open and then it get weak through the day. And it's also, it's entirely, everything's possible. It's also possible it breaks through, finds support there, and then continues higher for the day. And of course it's possible it opens up and just goes down. So, we'll see. We'll see what happens. And right now there's no real strong indication of any one of the scenarios. I think the most likely scenario is a test of the top of the gap and then a failure. But then there's the trick, trap, fool, and frustrate crew that comes in, and they could run this thing up for the rest of the week, and we get the Christmas rally. It's all possible. What I think is most likely, though, is being in the gap and prices sort of meandering lower means more lower prices are on the way. So, that's the direction of the trend. Here we have the VIX. Technically speaking, the VIX did make a new lower low than its previous low here on the 2nd of November, or Friday. So, new lower lows indicate usually, not one lower low doesn't mean a whole heck of a lot. But if we start seeing newer lower lows, the market could be looking forward into 2023 for bullish activity. The economy is forecast to continue to shrink for the first 2 quarters. And then after the first 2 quarters, it's forecast to start growing again, and for inflation to stabilize, and for the Fed to stop raising rates, and so on and so on. That's the market pulling forward 6 months. So there's no telling. It's a really sort of tough time to call any particular direction. Back here on the Qs, after we made this rally right here, it was pretty easy to say, okay, this was a bear market rally. It took out all the bears. Now Wall Street can continue its way down after it squeezed retail for liquidity. And then again here, I went back to the top of the channel again. It was time to get bearish, and so there it wasn't an easy call. It's never an easy call, but it was easier than most. It was easier than most times to make that call. So here we are right now. Went up close to the top of the channel right here, and then failed. And so, it's not as easy as a call as if it had tapped that top support and resistance line and then failed. But yeah, it looks to me like, just from what I'm seeing right here, it's looking to me like the bear market continues and we don't get much of a Christmas rally this year. All right, everybody. Let's take a look around here. The 10-year, 2-year spread has relieved a bit, has popped back up here a little bit, made new lower lows to negative 899 points. The previous record low, going back 40 years at least, was this negative 699. You can see it pretty much demolished that. Bitcoin, really interesting here. Here's the support. Actually, this is a trend line on Bitcoin, and so Bitcoin is gonna continue to track this trend line, for probably a total of about 18 months. So going into, let's see, that's May 2022. So going into the second half of 2023 is about when you can expect to see Bitcoin turn around. But not until then. The time that it took for it to build up to this period is about a year to a year and a half, and so you can expect a year to a year and a half coming out of this pattern. This is the distribution pattern. This sort of entire thing up here is just a classic Wyckoff distribution pattern, and usually it lasts for about as long as the distribution lasted. So it's actually could even be 2 years until we see Bitcoin start to turn around again, make a sort of a bottoming move like it made back here. Was that between 2018 and 2019? So yeah, Bitcoin. If you're interested in Bitcoin, which I don't know, I guess there probably are people who are. I would wait probably about another year before I started buying. Gold is actually in the tail end of a distribution pattern here too. This isn't the quite picture perfect Wyckoff distribution, but this is this is a distribution pattern nonetheless, and so it's in the process of making new lower lows here, and that this phenomenon ought to last again probably about another year or so before gold starts to pick back up again. So any gold bugs out there, I get it. I know according to Austrian economics, gold ought to be going through the roof, but we don't. As of right now, given the Fed-driven economic cycles, we don't live in the Austrian economic. It's hard to say we don't live in the Austrian economic environment, because it's kind of like saying we don't live in a physics-based world, but yeah, given central bank and central economic planning, gold, and for that matter all the rest of equities and so forth, can do things that are not that seem to defy gravity, that seem to defy the concepts of basic economics that we all learned with respect to supply and demand and money supply and precious metals and so on and so on. So unfortunately, I think this gold pattern is in for a continuation to the downside for a considerable period of time. Okay, so yeah, that's pretty much my forecast for the day. I will be taking opportunities to trade to the downside, to go short given the relative strength indices on the 1 minute and 10 minute lining up in sort of opposition to the VIX lining up. So when the VIX goes into oversold and starts coming out of oversold on both the 1 minute and 10 minute, if that corresponds with the cues coming out of overbought on the 1 minute and 10 minute, that'll be my signal for entry. All right, everybody, good luck out there. Keep your risks tight. Click like, share, subscribe, leave a comment, tap the bell. Hope you had a good weekend. Thanks for tuning in, and I will see you at tomorrow morning's strategy session. I am out.